Alright guys, so in March 24th, SCHD underwent yet another one of their annual reconstitutions, and without getting too much into the details of what that means, every year around this time they basically rebalance their holdings by removing stocks that don't meet these specific criterias and they replace them with stocks that do. As someone that is a low budget investor and someone that owns a few shares of SCHD and someone that really appreciates a good stock or ETF that not only has a long-term history of share price growth, but long-term history of dividend growth. Every time I hear a reconstitution with SCHD, I get a little bit excited to see what changes they have made that can benefit investors like myself, and this one was no exception. So this year, SCHD actually added companies before they removed them, but the first thing that I noticed when it comes to the changes that they made were the positions that they actually deleted. This year's reconstitution resulted in 17 deletions of stocks, including Pfizer and BlackRock. Now, I've never owned either of these two positions, but when I looked into Pfizer, it made sense on why they removed that position, especially when it comes to their 10-year share price history, how it was decreasing over time. But when it comes to BlackRock, I didn't immediately see why they would remove this position. It actually looked very healthy to me until I understood that it was in the finance sector. And it being in the finance sector makes sense on why they removed it, because from what I understand, the finance sector typically doesn't do that well when it comes to times like what we are in now with high inflation and concerns about recession, especially with high inflation, because financial companies like banks are the ones that increase the interest rates and stuff like that, and that's going to impact other companies. So getting away from that with SCHD kind of makes sense. So as an investor that wants every dollar that they invest into to have every opportunity to make as much money as they can over the long term, I was okay with the deletions of stocks that they made, but I was even more interested on the stocks that they actually added. Before the 17 stocks were removed, SCHD actually added 20 to their position, leading with ConocoPhillips. When it comes to long-term share price and dividend growth, the one big thing that stood out to me when it comes to ConocoPhillips is their 5-year dividend CAGR, which is currently at 16.5%. Now that's mostly to do with a dividend increase of over 140% back in 2022 due to increasing cash flow from increasing oil prices due to the impact of Russia and Ukraine. The addition of ConocoPhillips and other energy sector positions increased SCHD's investing weight in the energy sector up to 20% from the 12% that it was. And that made the energy sector the largest sector within SCHD's portfolio. Learning about the significance of the finance sector, especially in times like this, was very interesting and in hindsight pretty obvious, and I felt the same way when I learned a bit more about the energy sector. And what I learned with the energy sector is it typically has the opposite effect. It actually benefits from times of recession and high inflation. Regardless of how expensive things get, one of the necessities that people have is gas. They have to travel everywhere. So despite how much the price of oil per barrel goes up, people are still having to go to the gas station when they need to. And so with that, companies like ConocoPhillips are able to increase their free cash flow. And having more free cash on hand allows them to reinvest more back into themselves, pay off debt, be a part of mergers and acquisitions, buy back shares, and pay dividends. For me to really get an idea of how beneficial SCHD is now than it was on the 23rd, one thing I did was compare the top 5 holdings from each period of time. Mind you, I completely understand that this is only 5 positions out of the 100 that SCHD typically holds, but it at least gives you a glimpse of what to expect after the reconstitution. Plus, after this reconstitution, the top 5 holdings have about a 20% weight of the entire sector, so it gives you a nice idea. And when I did that, I compared some of the more important metrics when it comes to long-term investing, including their 10-year share price growth, their dividend yield, their 10-year dividend CAGR, their 5-year price return, and 5-year total return. And what I found out, I honestly kind of had some mixed emotions at the beginning. So before and after the reconstitution, their average dividend yield went up 3.12%, but their 10-year share price growth went down 15%, and their 10-year dividend CAGR went down by almost 16%. However, at the same time, their 5-year price and total return both went up 67% and almost 48% respectively. So on one hand, it is a little bit disappointing that the passive income side of long-term investing kind of went down for SCHD for them. Not kind of, it actually did go down for them, at least for this period of time. But on the other hand, it is really cool seeing them using the energy sector to take advantage of times that we're in now to try to give us investors more money in profits over the long term. So it was kind of cool seeing that. So with that, having an ETF that's already grown by over 110% in the past 10 years gives himself an opportunity for more growth, or at least more consistent growth like this. And that makes me more confident as a small investor, someone that only invests $30 a week, to continue to invest into SCHD and hopefully expect them to make better decisions like this to continue to have people invest into them for the long term. But let me know, guys, how did you feel about this 2025 SCHD Reconstitution? Do you feel like it bettered the ETF, or do you feel like it worse? So definitely leave comments below. I love learning from you guys because I definitely don't know everything when it comes to SCHD, but I'm always learning. So I appreciate you guys watching as always, and until next time, take care.